Welcome back to another episode of MBAs Teach Econ. Today is our first lesson on taxes. And in this lesson, we're going to discuss the three main types of tax systems in the world. And so we'll start with a progressive tax system because that's what we have here in the United States. So progressive in the US. So a progressive system taxes you more as you earn more income. So an example would be, let's do a number line here. We have starting at $0 to $10,000. We're going to tax 0%. So our poor population will not be taxed from $0 to $10,000 of earned income. Let's continue this number line here to $50,000, and we'll say from 10 to 50,000, we're going to tax that income at 10%, and then from 50,000 on, we're going to tax at 20%. So let's look at three different incomes and calculate their taxes. So we have income A. Income A is $10,000. Let's see what they owe in taxes. So for income A, hidden is $10,000. You can see that he's going to be charged 0%, so 10 times 0 is going to be 0. So our lowest income bracket would not be charged any taxes under a progressive system. Now let's look maybe at a middle type income under the system, income B. Let's say makes $40,000 a year, so he's going to get taxed 0% on the first 10,000. This is a percent up here. And then on that 30,000, he's going to be taxed at 10%. Therefore, 10% times 30, he's going to be taxed $3,000 total. All right, so let's look at a higher income person, income C. Income C, he makes $100,000. If you make $100,000, that first 10,000 is just going to be taxed at 0. That next 40, so the difference between 10 and 50, that next $40,000 is going to be taxed at 10%, and then that final 50 would be taxed at the full 20% times 20%. Grand total, 10% times 40 is 4,000. 50 times 20% is 10,000. Total of $14,000 in taxes. Now you often hear the term marginal and average tax rate, so let's calculate the marginal and average tax rate for this highest income bracket. So the marginal rate is what he gets taxed on that last dollar. So you can see on that last dollar, he gets taxed 20%. But his average tax rate, we can calculate by putting his full amount paid in taxes over his earned income, and you can see that his average tax rate is 14%. Now, how does that differ from a regressive tax or a proportional tax? Now, a regressive tax, everyone pays the same amount. So we'll just use our lowest income bracket, say that everyone had to pay $2,000. Even our person here in income bracket A would have to pay $2,000, or basically 20% of his income. For a proportional tax, everyone pays the same percentage. So let's go back to income bracket A. Let's say everyone has to pay 20%. So if everyone has to pay 20%, again, income bracket A winds up paying $2,000. And so you can see income A under the progressive tax system pays no taxes, or $0. And then under the regressive and proportional tax systems, he winds up paying $2,000 each under the assumptions that I've made. So this regressive and proportional tax system tend to hurt the poorer population more, although I'm speaking in some very general terms here, and there could be some specifics where these types of taxes would be more applicable and more useful. I hope that's been helpful. Thanks for listening, and see you again soon.